Hey everybody, it's Jonathan, just doing some market analysis. Found something very interesting that I wanted to point out. So let's get going. Bunch of things in front of you. Starting here, we have the Nasdaq, which is the white line, against the Russell 2000 futures, which is this purple line. And I just overlapped them going back to pretty much the beginning of the year. You can see how they behave. Nasdaq, weak relative to Russell. Nasdaq, strong relative to Russell. Right now, the Nasdaq again is strong relative to the Russell futures. Down here, actually, let's go all the way down here. Down here is what we call Vix Term Structure. VIX, people follow VIX for their risk. When VIX spikes, market goes down. When the VIX, when the volatility index goes lower, there's less uncertainty in the market. The overall market's going to trade higher. So instead of just following the VIX, or along with just following the VIX, what we teach, what Pablo Lucina and I teach over at Masters in Trading, is we want to look at the VIX, which is a 30-day measure of volatility, but we also want to look at the 9-day. We want to look at the near term, the VIN. We want to look at the VIX, the FAR, VIF. 3 months, 6 months, 1 year. And then I broke it down here, days. The VIX is 30 days. The 9-day VIX is obviously 9 days. The VIN. The VIN, the N stands for near. That's a 23-day measure of volatility. The VIF, F stands for FAR, is a 37-day measure of volatility. 3 months is 90-day, 180, 365. Now, in a normal environment, you're going to see VIX term structure rise as it goes further and further out because there's more uncertainty over more time. Once in a while, for instance, during the height of the global pandemic, the 9-day got very expensive relative to the 1 year. Why are we talking about this? Well, I was just doing some analysis, just looking at the relative value between the VIN and the VIF. And what I'm looking for is a difference in this 14 days of analysis, right? 37 days minus 23 days is 14 days. So this chart right here is the VIF against the VIN. And it shows the difference. And right now the difference is about 1.0, 16.5 to 17.5. That's 1.0. What does that mean? Well, we can answer that question by looking at different charts. And I looked at the VIN relative to the VIF going back to the beginning of the year. And then I also looked at the Nasdaq and the Russell 2000 because those are indices that we're watching very closely. Back here, VIF VIN spiked. It was trading 1. It was trading 1. It was trading 1. It was trading 1. That's why I highlighted these specific levels. Now, what I wanted to do is, how did the overall market behave when the VIN VIF have spiked throughout the year? What I found was the first time, the Nasdaq got crushed. Look at that Nas, got crushed. Russell followed it eventually. What about this time? Russell crushed. If you'll notice the relative value trade, Russell all the way lower, Nasdaq didn't really fall. So what this did was it whacked them back in line. Because as you can see, the Russell and Nasdaq were behaving very differently until VIF VIN got to 1. Right here, we see it again. The date is April 26th. The date here is going to be April 26th, right here. Not too long after, both of them fell really hard. And now finally, we're seeing this again. As these markets fall, the VIX, that 30-day VIX, is going to spike. Right now, we're seeing the VIN VIF back to 1. I think the market is going to sell off, and I think the VIX will also spike. But I don't want to sell Russell because the Russell's inexpensive relative to the Nas. Something to consider. Perhaps you want to sell Nasdaq futures. Perhaps you want to buy some short-term Qs to hedge your portfolio. So let me end it here with our VIX trading system. And our VIX trading system constantly monitors VIX term structure. And it's waiting around for these buy signals. Buy, 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 buy. We haven't got a buy signal just yet. When we get a buy signal, that actually means that the VIXs have all settled down and we should get a 100-point rally in the S&P futures. We're not getting a buy signal. I don't think that we're going to get a buy signal, and I personally believe that these VIX indices are going to start pointing higher. Now, why do we put so much weight in this VIX trading system? Well, let me show you. If I take you to a normal stock chart, and then if we just look under strategies for the backtester that's included with the VIX trading system, I'll take off the moving average. Now that I have the backtester on here, VIX 9-day, VIX 30-day, 90-day. Backtest trade size, we can just do a 1 lot, and we want to take profits when the S&P futures rally 100 points. For this example, I won't use a stop. Okay? Apply. Okay. Let me put this on S&P futures. And let's look at as much data as we can assess from this thinkorswim. Right click, show report. This is our backtesting report on the VIX trading system, which is those buy signals. You can see we've had 15 round turns, so 30 total trades going back to 2013. Here's the trade P&L. In this analysis, these buy signals have been 100% success rate, but we're not using a stop. So if we use a stop, it's no longer going to be 100%, but it's still going to be pretty darn good. So if we use a stop of, we can use 20 days, 30 days, 50 days. I encourage you, for those who have the VIX trading system and the backtester, to sample, see what works for you. I like to use 21 days. 21, apply, okay. Right click, show report. Now again, we're using all the data that they can show us going back to 2013. This time we had 21 total round trips. That's 42 total trades. And if we look at the trade P&L, it looks like we didn't make max amount here, but still profitable. One loser. And then recently we have a scratch, a break-even trade, and then right back to the winners. So that's the VIX trading system. That's why we monitor VIX term structure very closely. But also, hopefully you can see this sure feels like a red flag right now. So protect yourself, trade smart. Hope it helps. If you have any questions, guys, leave them in the comment in the video below, and I'll make sure I answer each one of them. Thanks a lot. Jonathan Rose, owner, Masters in Trading.